Hey everybody, this is David Skarika. So this is one of our legendary trade series. So this is a little bit of a different one because I'm not talking about George Soros or John Templeton or Paul Tudor Jones. We're talking about a guy who was a futures trader in this great documentary that was made called Bulls and Bears back in 1998. I've probably watched this thing dozens and dozens of times because it's about the guy loses all his money, then he makes it back. And like I talked about with one of my walks on the beaches, this guy, personality wise, is probably the guy I feel most, synergy with, most similar to, because he's kind of like a regular guy. He's from Chicago. His name is John Rambo Malton. They talk the story because he's got a big, he's a big burly guy. He's got a big burly voice. And when he came in, they were like, they call him Rambo into the pit, started talking. So he was from Chicago. He moved to Australia, probably similar to the way that reason I moved to Canada, better weather, beaches. Anyhow, he lived, obviously, he worked in the pit for years, and then he moved up to Port Douglas, which is a small town. So that's another reason I like him. I live in Eleuthera. He lives in he lived in Port Douglas, and he's in a house that I think he during the documentary that he ended up renovating, but it's not a fancy house or anything. And like I have a nice house, but it's not anything over the top. And I think even if I did make even more money in the markets, I'm not the type of person to build some crazy ass mansion. It's just not my nature. So you can kind of see when he's in his apartment in Sydney, it's a little messy. I'm a bachelor, so sometimes I get a little on the messy side myself. But anyhow, I really like this documentary because it's about losing money, then making it back, and he's got this great and his personality is the same way. It's like I said, he lives in a small place, not around a lot of people. Lives in a place you wouldn't think someone would trade from, especially in 1998 when the internet technology was nowhere as good as it is now. So I'm going to post this documentary. I highly recommend watching it, and it's just entertaining. It's much more than just some documentary on trading. It's just like he's a real character. He's pretty funny too. So anyhow, this is he's got this great analogy here on the markets, which I love. So then we'll get into the trading documentary, how he got his ass handed to him, got killed in the market, and then how he made money back. But I love this analogy right here because it's so true when it comes to trading and investing.
It's like a comet going through in the sky. You can't see the comet, but you can see the tail. We can see the price action, but we can't actually ever really grasp the market. You can't really ever really grasp the market. All you can do is try to jump on board the comet and ride it for a while. All we can see is the tail. That's the price actions, historical prices. People, you can analyze charts of the yin yang. You're looking at the tail of the comet. You got to learn to get aboard the comet and ride the comet. That's the idea of trading. It's the idea of getting on board the market and doing what the market tells you to do. It's a very hard thing to do. I would say only 2 or 3 times a year I really feel like I'm on board the comet. But when I'm on board the comet, it's the best feeling in the world.
Well, so that's like totally accurate because we'll even look at some charts here. Just like an example, like this would be like what he's talking about. Getting if you went long the market here. Remember, we got rid of shorts here, and boom, the Dow rallies from 32,000 to 37,000. That's a major index. Basically goes up 14% or sorry, 12, 13% in just a few months. So you get aboard the comet. That's kind of the tail that he's talking about. Or like I know like when I've had successful junior mining deals, like this Aftermath Silver, in a few years ago, we got into a financing of Aftermath in 2019 when it was 8 cents, and boom, the thing moved to $1.50. So, and this was the COVID crash, but you can see the move higher and the huge move higher. And again, that's kind of getting aboard the Comet. Or another one recently would have been Newfound Gold. Same kind of thing back in 20. I raised some money for them at $1, and again, right out of the gate, this thing went to $14. Again, kind of the tail of the comic, and just getting right in and riding it. Now he's saying 2-3 times a year. Like for me, I do equities, not futures trading. Futures trading is much more short-term orientated. You're just looking like if you had been long Dow futures for those last 3 months, you would have done amazing. You just want, in futures trading, especially commodities trading, you just want a huge move that lasts a few months. So in equities, you're looking for a huge move, and usually those moves in equities, you can see this move in Newfound Gold lasted a year. So that move in Aftermath lasted over a year. I had a company called Wallbridge. It had a huge move higher. So, and again, so I think for me personally, it's not 2 or 3 times a year. It's once every 2, 3 years. I get a big trade like this. So that's what I'm going to talk about next week a bit. I'm going to talk about a guy I know who's been very successful in junior mining, because a lot of these deals don't do well, and people can be like, Dave, why are you doing this? It's, you're like the Matthew McConaughey character in Gold at the beginning when he's depressed as hell because, the mining market is completely shambolic and falling apart. And you get times like that, like the last year has been like that. But the reason I do it is because when you get aboard that Comet in one of these mining deals, you're not just talking like making 50 or 100%, you're talking making 1,000%. And it's only happened a handful of times for me in 20, plus years of doing it. But when you do it, it's a great feeling. So let's get into like kind of what he did. So he traded interest rate futures. So most of that would be like, they don't have the Fed funds rate here on stock charts, but they do have the prime rate, which, tracks the Fed funds rate. So you can see they raised the prime rate a whole bunch of times in 1994. They cut a few times here. So he basically had a neutral to slightly bearish beta, right? So, and I think what he was doing was that he was like selling short-term securities or selling long or going long the short-term securities versus selling the long-term securities. He has like trades like that on, but basically in a nutshell, he was more short the bond, which we'll show you the long-term in a second. So everyone in 1998, when the market was booming, everything was doing fine, thought the next move by the Federal Reserve was going to be to raise rates like they did in 99, 2000 after the crisis. But then the Russian crisis began to hit, and and then everything began to tank, and in the markets. So then the markets began to price in rate cuts and rate declines. So all of a sudden he was caught on the wrong side of that trade. So he lost like a ton of money, right? And he shows a chart of it in there. So this is the 10-year, and you can see the 10-year bond. Look what it did here in 98. Went from 5.5% to almost 4%, right? So then he switched the trade where he began to, go long the treasuries when it was obvious that the Fed was going to have to aggressively cut, and he made a ton of money. That's it in a nutshell. I think it's a little more complicated. He was in there saying he traded the spiders as well one day. So I don't know what he was doing. He doesn't mention it. I would assume that after this decline happened here in 98, he was going long the spiders, long, S&P futures. This was actually one of the first successful trades I ever made. I was 21 years old. I had a part-time job because I still wasn't making any money doing the newsletter. And I still remember I bought call options on the S&P. If I had known now, what I know now, then I would have been buying Russian stocks, because Russian stocks fell like 99% and had huge rallies in the next few years. But I was like, the S&P was the main part of the rally. I still remember I had this little email blast service. I was literally emailing it to like 4 people. So anyhow, that's what happened. It turned around and went higher. I was really happy, happy at that. So, and basically, yeah. So basically, yeah, he readjusts his position, and then you see at the end of the video, he makes so much money. He had bought this abandoned golf course in northern Queensland, in northern Australia. So because obviously in options you're quite leveraged. There's also there's also an excellent one second. Rambo. 1 second. I'm gonna have to find him a second. Anyway, I'll find it. I'll post it before. I think he might be. Oh, that's right. He's right here. Sorry, it's Malton with a T. But anyhow, this is a great interview with them, and he talks about obviously he's older now. This is 5 years ago. I would think he was in his early 40s then, and this article, this is like, he's probably in his 60s now. So anyhow, still got all his hair though, it's still blonde. So, anyhow, he talks about his trading philosophy, et cetera, et cetera. So, yeah, and it's just a great documentary. They go into the pits, all of that sort of thing. So, it just shows you, and that happens in the markets. And also one thing that I'm going to talk about in my, in my kind of junior mining legendary trade next month, next week. And by the way, Warren Buffett and John Templeton have said this. All you need is a handful of trades. And that's the difficult thing about writing a newsletter is that you can lose on 90% of your trades. And if you have that 10% or 5% that do fantastically, you're set for life. Like you look at Warren Buffett, all those stocks that he's owned, it's like Washington Post, Coca-Cola. There's only a handful of them that he's had those like 20, 30-year holds. Most of the time he's holding stocks for 2-3 years, so like that's another interesting thing as well. It's like if you're in junior mining, like my friend Colin who runs this deal, he owns 23% of this company, even though it's come off because of the correction in gold prices, he's got one deal like this. Colin, is basically set for life, and I'm going to talk about this with another friend of mine who does venture capital. So anyhow, today is like I said, today's John Rambo Malton. Bulls and Bears, ride the Comet. I really think that this is an excellent documentary. And like I said, this is kind of an entertaining documentary to watch. And actually what's really funny is at the end, after they've golfed all day, they're grilling some fish up and they're loaded, they're totally drunk, sitting there talking about the markets and watching the news and I think John sees himself on the news and he kind of gets excited. So it's again, like I like it because they're kind of like real guys. They're showing themselves getting drunk, playing golf, doing whatever. And he's got all these tech problems living up in the middle of nowhere in Australia. And I can relate to that living on an island. So I really enjoy it. Like I said, I've seen this thing. So I probably watched this thing. When I found out, it's probably almost 10 years ago, I found out about this documentary and probably a few times a year. I'll watch it just because I enjoy it that much. So I hope you enjoyed this. It's kind of a cool trade. Again, it's about futures trading, but I equate it again to kind of what I do in equities. And and that comic thing, he's exactly right. Because sometimes you'll do a deal and it's just like the price of the deal, where the deal is, where you are in the market, and you're just like, you get that feeling, hey, I'm aboard the Comet,